17 AGs moved to block Blackrock from buying up utilities, citing ESG concerns. Let's dive into the details, shall we? A group of 17 attorney generals are looking to block asset manager Blackrock from making blanket purchases of utilities amid concerns over the firm's activist investing practices. Led by Indiana Attorney General Todd Rokita, the group filed a motion on Wednesday with the Federal Energy Regulatory Commission, FERC, challenging the firm's blanket authorization to purchase large stakes in such companies, arguing that the firm is not a passive investor and will use its stakes in companies to push a political and social agenda. Under scrutiny from the AGs is a practice known as environmental, social, and corporate governance (ESG) investing, in which an asset manager considers such factors when making investments and does not solely look to maximize financial gains. Critics of the practice have warned that doing so may constitute a breach of a firm's fiduciary duties to the investors. Specifically, the AGs seek to intervene in FERC's reapproval of a 3-year blanket authorization to purchase, acquire, and take over $10 million in voting securities of any public utility, electric utility company, transmitting utility, or holding company in a holding company system that includes an electric utility company or transmitting utility. The AGs note that FERC will only approve such an authorization should it be consistent with the public interest in light of competition, rates, and regulation, before noting that Blackrock has repeatedly secured such permissions by claiming to be either a passive or non-controlling investor that does not seek to change or influence the control of the issuer or exercise any control over the day-to-day management or operations. The AGs emphatically argue that BlackRock's embrace of ESG practices has rendered such claims a farce, saying maybe BlackRock was a passive investor 10 years ago, but today it's an environmental activist. Indeed, BlackRock's own public commitments belie its representation to the commission. In the press release announcing the motion, Rokita excoriated BlackRock and the ESG initiatives as attempting to circumvent the public to impose unpopular environmental mandates without going to the ballot box. This is yet another example of radical leftists trying to circumvent the will of the American people in order to implement their draconian mandates, he said. The restrictions these elitists are trying to impose on energy companies and utilities would never win approval at the ballot box. The public interest is served when investment companies build their business models on maximizing financial returns for clients, he continued. Conversely, the public interest is hijacked when these companies subjugate clients' financial interests to leftist fever dreams. Yeah, so I think this is really interesting. They're finally starting to push back on all of this stuff. I'm happy to see it. Like, this has been going on for so long, and it just keeps getting worse and worse and worse and worse, and no one ever does anything about it. Now with the Dylan Mulvaney Bud Light thing, I think a lot of people are like waking up, like, okay, there is quite a culture out there that doesn't want all this leftist stuff. It's been in the media for so long. I think a lot of people are just like, okay, this is the trend. I don't think it's the trend, though. I think that a lot of these big companies own these media companies and such. So these companies and normal companies and media companies, they'll come out for all these ideas, but people don't really want them. It's just these elitists that are investing into these companies. That's who wants this stuff. But, you know, that's just my opinion. What's your opinion on the story? Please let me know in the comments below. Also, be sure to smash that like button, subscribe to the channel for daily news updates, hit that notification bell, and share this video to help spread the news. Thank you so much for watching, and I'll catch you in the next one. Peace out.